From New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Weston. Well, the markets today, after being way up and way down, don't seem to be either. They seem to be wandering around, and Scarlett Fu is here to explain maybe that's not a bad thing, Scarlett.
Maybe it's not a bad thing after all the volatility we had seen in previous days. Yeah, it's a mixed day in U.S. equities and actually across asset classes as well. So let's start on a security that's actually moving. Let's talk about WTI. Oil prices are now up by almost 2%, approaching $40 a barrel in New York. Energy stocks are, as a result, the best performers in the S&P 500. Iraq will be cutting production, compensating for its past non-compliance with OPEC Plus's agreement to reduce output. So that's giving oil prices a bit of a lift here. You can see gold is taking a step back. The dollar gain versus almost all the G10 currencies except the yen, and we are looking at lower yields in the 10-year for a second day. David, the big backdrop here is it is the tug of war between the increase in COVID-19 cases and signs that the economy is on the mend. You had the Philly Fed manufacturing report that showed us back in positive territory, so that means manufacturing is no longer contracting, and it confirms the positive reading we got in last week's Empire manufacturing. Leading indicators also higher than expected. On the other hand, jobless claims still coming in above 1 million. For the most part, we're kind of in a wait-and-see mode right now because in the past 2 weeks, we really saw the S&P 500 range-bound near its peak, and then last Thursday happened. It was a sharp drop. It was a long overdue pullback by lots of people's explanation, and we briefly dipped below 3,000 in the S&P 500. Then a recovery once again as the Federal Reserve gave more details on its plans to buy bonds, corporate bonds, not just through ETFs, but individually through its own index. So that resulted in a 77-point range over the last 3 days, and we have seen buy the dip come back again as a mantra for the markets. One thing I should note, volume has been lighter than average, 30% below the 30-day average. Quadruple witching is tomorrow, so perhaps that plays into it, and maybe we'll see volume pick up once again after that. But we are after Memorial Day, so it might just be the summer doldrums as well. David?
Yeah, there is that, the summer doldrums. I look forward to this. Thank you so much to Scarlett Fu for that report on the markets. Well, former National Security Advisor John Bolton is causing quite a stir with a new book that he's trying to bring out, at least, to talking about his dealings with President Trump in the White House. To talk about the political consequences of that, we welcome now our political contributor. He's Rick Davis of Stone Court Capital. He, of course, among other things, managed the late John McCain's campaign for president. So, Rick, there's been a fair amount of reporting already. We haven't seen the book, fair amount of reporting what's in it. From what you've seen so far, what's the most damaging thing for the president that you've seen?
Well, I think it runs along two courses. One, the stories that John Bolton has been telling in the book that we've seen in some of the excerpts in news reporting. As you say, the book hasn't been distributed yet to a larger audience, and with all these lawsuits that the administration is trying to tie it up, maybe we will, and maybe we won't see it sometime soon. But along two courses. One is information we didn't otherwise have that has made its way into the public domain. Of course, we knew the Ukraine story. That got vetted out pretty well during the impeachment hearings. But we didn't hear about Donald Trump's conversations with Xi Jinping about the Uyghurs and the encampments that the Chinese have built and his basic acquiescence to that. And that's a news item that I think will generate a lot of interest. And I would say, too, that falls along an interesting campaign theme where the Trump administration, Trump campaign, has already been trying to frame a message around Joe Biden's campaign that Joe Biden is weak on China. And so this was a double whammy. It is news that we otherwise didn't have, so that it'll get a lot of attention, and it undermines Trump's assertion that he is tougher on China than Joe Biden would be.
So Rick, let me ask you, it's certainly grist for the mill for those in the media. Is there anyone out there, any voter who's likely to switch their vote based on the things we're hearing so far about this? Is this all a big surprise to people? Does this really bother President Trump's base?
I don't think it'll bother his base, David, but there are people who are going to be scratching their head in the middle of this, voters who would swing one way or another, and they would be the people who are beneficiaries of and supportive of Donald Trump's economic growth over the last 3 years. Obviously, that's been set back by the pandemic, but there are a group of voters who are up for grabs who want sort of a liberal economic approach like Donald Trump has had, and would worry that the Democrat administration under Joe Biden would usher in more regulation, more constraints, higher taxes. And so they could be found in the middle of this debate, wondering whether or not Trump would be effective as a manager of the nation and our economy if he's been dogged by these kinds of scandals that are represented in the book.
So the John Bolton book isn't the only thing President Trump has to deal with today. We also have a Supreme Court ruling on the DACA, that program that President Obama had to not deport people who'd come here as children. He lost that. That's something he'd campaigned on. Is this going to hurt him politically or help him? I saw he came out and tweeted about blowing shotgun blasts to people's faces and things, saying you got to vote for me or we're going to lose our Second Amendment rights.
Yeah, it's definitely a distraction to his message. You know, as you point out, he spent the better part of his last campaign for president in 2016 talking about the border, building a fence, and stopping illegal immigration. And he threw the DACA program under the bus in the first year of his administration, going after it, saying, you know, these were done inappropriately, and it's been tied up in court really ever since then. So you'll notice lately there's been not a lot of talk about immigration. He's obviously moved off of that as a topic to his reelection campaign, and the Supreme Court decision kind of reminds the American public and the media that this debate hasn't ended, that there is still a lively immigration issue that's out there, and I don't think one that actually is going to benefit Donald Trump. I mean, part of what he has tried to convince his base is that he's been effective at building the wall and stopping illegal immigration, even when the facts don't necessarily present that case. And now that the Supreme Court has said he was wrong on repealing DACA, it's going to be another strike. And I would say in this case, the base may be sensitive to it. If he can't deliver for them, then what good is it that they support him? So I think for the purposes of today, he's trying to obviously change the topic, and he's extremely good at it, right? And he doesn't matter how low he goes, he'll get everybody talking about his latest tweets, and we'll forget the fact that the Supreme Court just made a pretty landmark ruling on immigration.
Yeah, a big ruling, no question about it. Thank you so much to Rick Davis, our political contributor from Stone Court Capital. Coming up here, we're going to talk with the head of one of the most important investment banks that there is. He is Ralph Schlosstein, CEO of Evercore. That's next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We welcome now Ralph Schlosstein. He is the CEO of Evercore, as well as my colleague Shonali Bossack. We have a lot to talk to Ralph about, but Shonali, why don't you get us started?
Sure. Thank you, David. You know, Ralph, for the last 6 years that I've been covering investment banking, we've watched bankers leave most major large banks to go to Evercore, to go to firms like yours. Earlier this year, when you talked to investors, you had said that the industry would be hiring a lot less this year, paying less this year. What's your expectation for where the investment banking industry goes from here in the next couple months?
Well, I think, first of all, we've continued to hire. We've already hired 2 new senior managing directors this year, and we have a handful of other conversations still underway. And typically, we've hired 4 to 7 people every year. This year, we'll probably be a little bit at the lower end of the spectrum. I do think that the industry is recovering along with the economy more rapidly than many of us would have expected. And that's probably, or undoubtedly, because of the incredible speed and size of the monetary and fiscal response, both here in the United States and around the world. So I would say that whatever people's worst fears were a month or 2 ago, we don't seem to be headed toward those right now.
I want to address some of what's going on across America right now also with the protests. It's really shined a light on talent and diversity, especially on Wall Street, where there are so few black executives at the top of many firms. How is Evercore thinking about this issue?
Well, we've had a long commitment to diversity and inclusion. We have a number of networks in the firm to support various, the underrepresented minorities, women, veterans, the LGBTQ plus community in response to the events of the last 3 or 4 weeks, which are, of course, only the most recent manifestation of certainly decades and centuries of discrimination and racism. We've made the largest charitable contribution we've ever made. We've set aside $500,000 to match our employees' contributions to organizations committed to eliminating racism, social injustice, police brutality, etc. But that's just a beginning. I think we, like the rest of society, have underperformed in the proportion of people that we have in our firm of color, people, females, and people of minority, sexual or other orientation. And it's something that we have a huge long-term commitment to.
So, Ralph, this time in America has also drawn a lot of attention to the haves and the have-nots in society, how inequality more largely is becoming a much greater part of the discussion moving forward. We're heading into an election cycle. What role is that discussion going to play as we head into November?
Well, I think we've had up until the COVID-19 pandemic, we had a 11-year economic recovery, which, while it touched people broadly, it clearly benefited those who are in the upper strata of the country financially. And that gap has continued to widen. Even when we had 3.5% unemployment, it was still widening. And I think those of us who've been incredibly fortunate in this country should individually be prepared to foot more of the bill of taking care of those who are less fortunate, either from a healthcare point of view, from a housing point of view, from a jobs and income point of view. And so I would expect that there will be somewhat of a difference between the two candidates on taxation of the highest income people, on taxation of capital gains for individuals, which has been one of the single most important things, widening the gap between the wealthy and the not wealthy, and also perhaps some adjustment upward in corporate taxes to 25 to 28%. My guess would be, since my suspicion is whoever is elected, their term will start with quite high unemployment by the standards that we've had over the last 3 or 4 years, and whatever changes might be made on a tax front, if it is Vice President Biden, that might be very well advised to phase those in over a couple of years so as not to stunt the recovery.
Ralph, you said in your business at Evercore, you're still hiring people. The business may be coming back faster than we thought because of all the support coming out of Washington. Tell us about how you're doing that business, because we tend to think of investment bankers as people who get on planes, go and visit with people directly. When we come out of this, whatever that means, are we going to be doing more deals remotely, and does that interfere with you getting the work done? What's your deal flow right now looking like?
Well, as I've said on our earnings calls, our largest business is M&A, and that business has been largely paused over the last 2 to 3 months. And the reason for that is that we're missing some of the necessary conditions for a normalized or active M&A market. We need strong equity markets to support financing for transactions. We need receptive debt markets. Because of the actions of the monetary and fiscal authorities here, those have actually pretty much returned, as I'm sure you report on every day. What isn't present yet is a clear direction for the future of the economy. And you've seen, for example, hundreds and hundreds of companies who provide earnings guidance normally pull their earnings guidance. And so if the management of a company can't tell its shareholders what to expect in terms of revenues and earnings over the next few quarters, how can we possibly expect a buyer to be more prescient or intelligent about that than the management of the company itself? So I think we need to have a little more clarity on the direction of the economy before CEOs have enough confidence to enter into transactions. Clearly,
Okay.
Last week we represented Grubhub in its sale to Just Eat, so there are transactions that have strategic merit that are still underway. Clearly, companies that are not in challenged industries or in liquidity challenges are beginning to think more open-mindedly about major strategic initiatives, but I think there's still a little bit of a way from pulling the trigger on these.
Okay, I want to thank my colleague Charlie Bossack for joining us. Ralph Schlosstein will stay with us because we want to focus on Washington, some of the things he talked about, what Washington's done, how it may be affecting the marketplace. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Ralph Schlosstein, CEO of Evercore, is still with us. So, Ralph, you mentioned the fact that Washington, both fiscal and monetary, has given a lot of support to the marketplace. Let me ask you, has it really been necessary? For example, when the Fed came in and started buying corporate bonds, not ETFs, but buying corporate bonds, did that really need to be done with the spreads really blowing out that way?
Yes. I would say that there was, if you go back about 2.5 months or so, there was absolute illiquidity in the debt markets, short-term and long-term. No company could finance investment grade. The highest quality companies, when they tried to roll over their commercial paper, found it difficult to do so. So we had a real severe liquidity crisis, and the further down the credit spectrum you were, the more severe it was. And the interesting thing about what the Fed did is by being as aggressive as they were, they actually reduced the need for even more aggressive action. The fact that they stepped in and aggressively bought treasuries and mortgage-backed securities initially and broaden the aperture of things that they would be involved in from a support point of view to include private sector businesses, municipalities, Main Street businesses. Certainly the fact that they're there as a buyer of last resort typically ensures that they don't have to use those powers as much as they otherwise would have had to use them.
Right. But Ralph, does there come a point, at some point, where it starts to distort the marketplace, where actually you can't really have price discovery because the thing that's determining the price is not the value of the asset, but actually what we think the Fed might do? Well,
there's certainly an element of watching what the Fed does, and certainly if you're a market maker or a trader, you're not going to want to be on the other side of a trade of an investment that the Fed is making. You wouldn't want to be short things that they're interested in buying. However, I do think that the confidence provided by the Fed has allowed more normalized markets to return and to get a real two-way flow in markets that are just fundamental to the support of our economy. The irony here is this: in this particular crisis, the financial institutions are in as strong a position as they have ever been. And so the Fed supporting the liquidity of the market where financial institutions didn't play themselves provided a really important boost both to the real economy and to the markets.
Does what the Fed is doing, and for that matter, Congress as well, does it affect some of the deals that you might be looking at? As a practical matter, it's driving up all asset prices, right? Without regard almost to the strength underlying of the company. Does it really affect your deal making?
Yeah, well, the hardest transactions to do right now, as you can imagine, are transactions where a significant amount of cash is involved. For example, the transaction that we were involved in last week, the Grubhub Just Eats transaction, that was a stock for stock transaction. So you have to obviously do diligence on both companies' prospects. The buyer has to do that on the seller, and the seller, because its shareholders are taking the buyer's stock, also has to do due diligence. But when you have two securities that have been roughly comparably affected by in this case, the actions of global monetary and fiscal policies, because Just Eats is a European company, it's an easier transaction to get done. I don't think until we have greater certainty about the direction of the economy that you'll see any large for cash mergers at this point.
Do the CEOs you talk to have any sense, any visibility about when we might have that greater certainty about the economy?
Well, I think the real question is going to, we're clearly in the midst of a pretty significant snapback in the economy. I think that my own view, and I think most CEOs' view, is that the damage to the economy is greater than would be suggested by a sharp V recovery.
Right.
Somebody described it as what we could have as a check recovery, where we have a steep decline and then it doesn't go up quite as much.
Or a Nike swoosh, to borrow a logo from another company. Thank you so much to Ralph Schlosstein. He is CEO of Evercore. Coming up next, we're going to hear from the CEO of Delta Airlines. He is Ed Bastian, and this is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Earlier today, I talked with Ed Bastian, CEO of Delta Airlines, about what the pandemic has done to his business and the path back.
We're in a process of a recovery, no question about it. It's slow. It's going to take some time, but there's clear signs. The momentum we have is meaningful, and it's continuing to build. We bottomed out in mid-April with maybe only 5% of our normal customer load traveling today. That number is closer to 15%. So the optimist in me says we've tripled over the last couple months, which isn't bad, but we got a long ways to go yet. I expect that number to get up to 20% in the coming weeks. We're adding a bunch more flying, both in July and again in August. 1,000 flights a day each month added in the next couple months. And so by the end of the third quarter here, we hopefully are back to about 30% of our loads that we are carrying. So we're being very disciplined, taking good care of our people and customers on the journey, but the recovery has started.
So how much visibility do you feel you have beyond that third quarter? I mean, if you go up to 30%, does it keep rising at a fairly steady pace, or is there possibly a plateau? What do you anticipate going forward? When will you be back to essentially full usage?
Well, there's never been more uncertainty given what we're addressing with both the pandemic and the resultant economic impact. Changes in business travel patterns will also impact this industry. So our crystal ball is a little murkier than normal. But I do expect after Labor Day, it's going to be an important milestone and pivot point for us, because that's typically when business travel starts to pick up again. Right now, the vast majority of our customer base is leisure. People going out, there's some good bargains not just in the air, but on the ground as hotels and theme parks and casinos are all opening. But we need businesses to start opening. And right now, most businesses are still largely closed, big corporate businesses. And as they start to open, hopefully after Labor Day, you'll start to see an improved mix of revenue flow, and that then will be the next stage of the recovery for us.
A key element for all businesses seeking to reopen is the confidence of customers that they will be safe when they go to the business. What are you doing at Delta? Give us a sense of what the sort of operational changes you're making to try to reassure travelers that they will be okay on your aircraft.
Well, that's our most important task here, is protecting the safety and the welfare of both our people as well as our customers. And we're doing a tremendous amount. We're accustomed to safety. Safety is in our DNA. That's what we sell. We sell safety in the sky. And we now have added another dimension of that, is safety from the virus, safety with respect to the hygiene and the sanitization on board our aircraft. We've for those of you that haven't been out traveling, you'll see a lot of changes and I think significant improvements in the experience as you go forward. Masks are required, both in the airports, as you board the plane, as you're on the plane, and masks. I get a lot of questions about masks. Masks are there not just to protect you, it's to protect others as well on board. One of the most important layers of protection we can have is using masks throughout society today. We've put distancing protocols in place. We've capped load factors. On Delta, we will not board planes more than 60% full, which guarantees the seat next to you, every seat next to you, is open on board the plane. There's no middle seats being sold at all. We've put electrostatic fogging in place before every single flight that takes off. And we've also added a considerable amount of time and attention focused on the filtration systems on board our planes. We have HEPA filters, which are the highest quality filters one can find. It's what's used by hospitals in their operating rooms and clean room environments. HEPA filters completely circulate and recirculate the air every 2 to 4 minutes, with 50% of that air coming from fresh outside the cabin. So the air you're breathing is completely changed out every couple minutes on board the flight throughout the entire journey. And the tests and the monitors that we've been using, because we've got sensors now on board our plane to test the quality of the air, it's the purest air quality you'll find anywhere. It's 10 times better than a building environment or retail. It's really phenomenal.
That was Ed Bastian. He's the CEO of Delta Airlines. And we turn now to Brendan Case, who covers aviation for Bloomberg. So, Brendan, we heard there Ed Bastian saying by next spring, he thinks they're going to be at a break-even situation that will continue to increase the traffic. Is that realistic, and how does it compare to other airlines?
Yeah, I think it's realistic if you take a pretty upbeat view of the outlook for what's going to happen with the pandemic. You know, I think that if there's a sense that it's coming more under control, you could certainly see, continued and pretty substantial gains in flying. And if, on the other hand, you think that there could be a second wave, or, currently we're not even necessarily out of the first wave, but if things were to get worse, then I think you could see people going right back into the sort of shell that they were in earlier this year.
At the same time, Brendan, at least what little I know about the airline industry, we always look at load factor, the percentage of the aircraft that's being used on average, and they're going to have 60% load factor. Can an airline make money at a 60% load factor?
No. The U.S. airlines are geared to making money at much higher load factors. Of course, just last year, one of the main trends was that they were getting up into really high load factors, very, very full planes. They've certainly cut costs dramatically, but I don't think that they're going to be able to make money, at least not on a sustained basis, at those types of load factors. They're actually voluntarily, essentially choosing to fly at limited load factors right now because they're generally not filling the middle seat. And so, they want to give people some social distance inside the cabin. And that, I think, is probably the right move for now. Looking at the long term, whether they can make money doing that, I think that's doubtful.
Well, one question, Brendan, in the long term is, might they make money because there'll be fewer airlines? Are all the airlines going to make it in this circumstance?
Great question. Hard to answer that question in the U.S. at the moment. Certainly, in abroad, many airlines have already, declared bankruptcy or shut down. Here in the U.S., with all the government support that they've gotten, that's not likely in the near term. But to your question, over the longer term, can the market support the industry as it's currently configured? That's a real open question. I think that we can't really answer that right now. It depends a lot on what kind of demand they get in the next couple of years.
Okay, Brendan, thank you so much for joining us today. That's Brendan Case, who reports on the aviation industry for Bloomberg. Coming up, the Bank of England gave some more support to the British economy today. We talk with Bloomberg Senior Executive Editor for Economics, Stephanie Flanders. That's next. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The Bank of England today decided to put another $100 billion into the kitty to buy some government bonds over in England. At the same time, it left interest rates where they were. To take us all through it, we now welcome Stephanie Flanders. She's a Wall Street Week contributor, but also Bloomberg's Senior Executive Editor for Economics. So, Stephanie, did the Bank of England get it right today, do you think?
Well, it was widely expected, and actually it was £100 billion, which is even worth a little bit more than $100 billion, although I'm sure we'll get there in the end. But they've added to their bond buying. But they also, the surprise for the markets was that they were suggesting that they might sort of taper off the bond buying by the end of the year, at least in terms of their formal plans. They're saying they think it could end at the end of the year. I'm not sure that we really believe that they won't buy more at that point, but it does speak to the uncertainty they see. Remember, the UK has really not got very far along lifting the restrictions on the economy. We're well behind continental Europe on that. So the uncertainty about what this crisis is going to leave behind, let alone worries about second wave and other things, is really great. And I think policymakers, both on the government side and on the Bank of England side, are factoring that into their considerations. They don't want to commit themselves before they really see what the scope of the damage is.
So as you say, Stephanie, you've got the COVID-19 issues, and those are devilishly difficult, as we've proven here in the United States. You also have that little thing called Brexit that's hanging out there. What will buying more bonds, £100 billion more bonds, what will that do for the economy in the UK?
Look, it's the same question that you raise is everywhere, but as you notice that there's a lot more going on in the UK. Even the potential, the government's not been very effective in dealing with the public health crisis, although the measures to support the economy have been effective. We've had this prolonged shutdown, which may mean we have the biggest decline in GDP of all the major economies. So to add to that, the decision to just move out of a very long-term, 40-year relationship with the European Union, obviously on the outside looks a little crazy. But I guess the positive spin on it is that whatever cost that one sees associated with Brexit, whether it's a few percentage of GDP, that seemed like much bigger number a year ago than when we started seeing these big numbers related to the shock of the COVID crisis. So I can't help thinking that's what ministers are thinking. We just need to get Brexit over with, because any negative effects will be kind of lost in this emergency over COVID.
Stephanie, go across the channel and talk about Europe and what's going on in Europe right now. The ECB certainly has stepped up to the plate and really tried to support the economy there quite a bit. How is it working out?
You know, I think when I think back to the experience of the global financial crisis and then the Eurozone crisis coming after that, that Eurozone crisis was partly because the Eurozone had not grappled quickly with the problems that Europe faced as a result of the global financial crisis, and they had made that mistake of tightening fiscal policy too soon. we're really seeing a different approach this time play out, where actually they're teaching the rest of the world lessons. We have massive fiscal support, but the European Central Bank, as we saw today, another record drawdown of those cheap special long-term loans for the banking sector, another over $1 trillion euros going out the door. You know, they are not putting the brakes on the credit side of the economy when we're just starting to see economies reopen. And as I said, we're also getting that, we've talked in the past, there's going to be a bit further fiscal support. And you're seeing Germany and France in particular coming back pretty quickly. That V-shaped recovery we are seeing even on the consumption side in the latest numbers.
So how do you put together, on the one hand, the economic side, some of the stimulus being given, monetary and coming fiscal, with how you're handling COVID-19? It's hard for all of us to sort out right now how much of this is the economy, how much of this is consumer confidence as people can come back into the marketplace.
I think is a really striking lesson, especially when you look at the data coming from Germany and France, as the fear of the virus and fear of getting infected. They actually have a measure of that they've been polling people for 6 months or more or a few months in Germany. As that fear goes down, you've seen consumers go back. I talked to my colleagues in Germany, a German economist. Their families are going out, eating pizza, going back to swimming pools. It's starting to feel normal in only a few weeks. And I think that's because there's confidence in the strategy, confidence that the government has got the disease under control. Where you have in the US, some states where cases are going up, or Sweden, for example, where they never had big lockdown requirements, but people had been worried about going out, you may see a much slower pace of recovery. But it's a really good example. If you get it right, you can have that V-shaped recovery that so many investors are betting on.
So give us a sense of the spectrum. If the United States is struggling, we're seeing it right now in Florida, we're seeing it in Texas, we're seeing it in Arizona. And in Germany, it appears they've done a much better job. France, they've done a better job. Sweden never tried to. Where's the UK in that spectrum?
The UK is, the Boris Johnson likes to brag often that we have the world beating. We seem to be beating the world in all the wrong ways. We have some of the highest death rate among the advanced economies, certainly one of the highest. We looks like, as I mentioned, we're going to have the biggest hit to the economy. And I think that the length of the lockdown has also been greater. And of course, people are feeling the strain of having been trapped inside for 13 or 14 weeks. So the UK is coming pretty low on the tables on pretty much every measure. Not before you even think about Brexit. I told you it's a grand slam of problems facing the economy.
Yeah, no question about it. How does Europe right now regard the United States in the way we're handling the crisis, either on the COVID-19 side or, for that matter, on the fiscal and monetary stimulus? Certainly, our government has stepped up in a big way.
Yeah, I think there's people are impressed by the level of fiscal support. Obviously, they try and look past some of the different mixed messages coming out of the White House sometimes. I think there's some respect for the decentralized model of government, that you do have states doing different things at different times. Incidentally, we may have that in every country. Increasingly, if we have another wave in different parts of the country or in different parts of Europe, you may get isolated lockdowns rather than national lockdowns. I think that's what most economists are thinking, that if you do start to, this battle against the virus isn't over, but the government response next time, well, maybe it'll be more nuanced, maybe it will be more place-based. And in that sense, America is similar to everywhere else.
Fascinating. Thank you so much, Stephanie. Always great to have you with us. That is Stephanie Flanders. She's Senior Executive Editor for Economics at Bloomberg. And right now it's time for First Word News, and for that we go to Mark Crumpton.
David, thank you. A divided U.S. Supreme Court today ruled that President Trump cannot end the Obama-era program that shields 670,000 young undocumented immigrants from deportation. The justices rejected administration arguments that the DACA program is illegal. The Deferred Action for Childhood Arrivals program protects people who are brought into the country illegally as children. On Twitter, President Trump called it a, quote, horrible and politically charged decision. While many states are continuing reopening plans, several states are seeing disturbing trends. In Texas, coronavirus-related hospitalizations rose for a seventh straight day, the longest streak since the pandemic began. That brings the one-week increase up nearly 50%. And in Florida, new cases jumped 3.9%. There have been nearly 17,000 new cases over the past 7 days, the highest level ever. A warning from America's infectious disease chief, Anthony Fauci, says the upcoming NFL and college football seasons may have to be canceled. Dr. Fauci tells CNN that unless the players are isolated in a bubble and tested every day, it's hard to see how football can be played. Fewer than 5 million tourists could end up visiting Japan in 2020. That's sharply lower than the government's goal of welcoming 40 million visitors. The number of visitors to Japan tanked last month to the lowest levels on record as the pandemic largely shut down the country's borders. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. Coming up, we're going to go deeper into that Supreme Court immigration decision that Mark just told us about. We're going to talk with Greg Stohr, who is our Supreme Court reporter. That's coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and on radio. I'm David Weston. We want to go further now into that Supreme Court ruling out just today a split decision on DACA. That's the Deferred Action for Childhood Arrivals policy of the Obama administration. And to take us through it, we welcome now Greg Stohr, our Supreme Court reporter. So, Greg, give us your top line on what happened here. This is certainly a setback for President Trump and his initiative to really stop DACA.
Yeah, it's a real rebuke to Trump and his administration. The court was very clear that no one doubted the authority of the Homeland Security Department to rescind the DACA program, but the way this administration did it, the way it cut corners, didn't fully consider what it was doing, what its options were, that wasn't good enough. As a formal matter, the administration still could try to rescind DACA again. As a practical matter, that's going to be awfully hard to do before the November election.
At the same time, as you point out, this was basically a statutory or regulatory decision under the Administrative Procedure Act. It was not constitutional. They had the opportunity to say it violated equal protection, and actually the majority, including Chief Justice Roberts, didn't go that way. Theoretically, some administration would have the authority to come back and change it and do it right.
Yes, that is certainly the case. You're right. Only Justice Sotomayor said that there was a potential constitutional problem here. And there are other lingering questions out there. The court didn't uphold DACA in the sense that it said that the whole program was legal. It was narrowly focused on the way Trump tried to rescind the program. There is another case out there. It is at least possible that case will eventually make it up to the Supreme Court. That is Texas and other states challenging the DACA program as a whole. We'll have to wait and see what happens to that. But, at a minimum, this is a real setback to opponents of DACA and a huge setback to the administration.
Yeah, and I thought in reading some of the opinions, it really struck me that I think the ACT administrator tried to repeal DACA, and then after it had been challenged, tried to come up with a new rationale, which you can't do under the Administrative Procedure Act. I mean, that statute is there. Congress put it there to say, you regulators, when you decide something, you better have the reasons in front of you, explain why you're doing what you're doing.
Yeah. What happened is that the acting Secretary of Homeland Security issued this and said, our main reason is that concern that the program is illegal. And then once litigation started, Secretary Kirstjen Nielsen put out another memo that said, and here's some other reasons why we're rescinding DACA, more policy focused. And what John Roberts said today was that at least much of that is a post hoc rationalization, and that's not the kind of thing we can consider. When you take a step like this, you have to give your reasons at the outset.
Yeah, and Greg, it does strike me that those of us in the media sometimes can paint with too broad a brush, where we say there's conservative justices, there's liberal justices, they're all going to vote one way or the other. Chief Justice Roberts now more than once has gone with the so-called liberal justices. What does that say for some of the other big decisions? We still have some big decisions coming down this term, probably this month.
Yeah, we sure do. In terms of the Chief Justice, this reminds me an awful lot of what he did last year with the census ruling, when he joined with the liberals to say that the administration's rationale for adding a citizenship question was pretextual, that it was contrived and they were hiding their real reasons. What that means going forward, good question. We have a big ruling on abortion, the first one since Brett Kavanaugh and Neil Gorsuch have joined the court. It's a Louisiana case. That's still outstanding. And then we have these two cases involving subpoenas for Donald Trump's financial records. That case, certainly there are a lot of potential outcomes there. It wouldn't shock me if the Chief Justice, at least in part, agrees with the liberals in terms of whether those records have to be turned over.
Yeah, well, Greg, at least for those of us who really like the Supreme Court, this was really fun. 5-4, people joining in different parts of the opinions. Can't get much better than that. Thank you so much to Greg Storr, who really understands the Supreme Court backways and forwards. So coming up on the second hour of Balance of Power on radio, we're going to be talking about that Trump rally that's planned for this Saturday in Oklahoma with the former Speaker of the House. He is T.W. Shannon. That's coming up on the second hour of Balance of Power. Thank you for joining us for this hour, and this is Bloomberg.